Let's get after it. The world is shifting beneath our feet, and the headlines you're about to see are just the beginning. A tectonic shift is happening on the world stage, and you need to know about it. The balance of power is being tested in ways we haven't seen in decades. This isn't just another trade dispute, it's about power, alliances, and the future of the global order. The stakes are higher than ever, and the players are making bold moves. For years, the United States set the terms and allies followed. But now, India is pushing back, hard. The old script is being rewritten, and India is holding the pen. The trigger? New US tariffs on Indian goods, a move that sent shockwaves through diplomatic circles and rattled global markets. New Delhi's message: the days of unquestioned American dominance are over. India is making it clear, it will not be sidelined or dictated to. India is no longer just a partner, it's a power in its own right and won't be pushed around. Its leaders are stepping onto the world stage with new confidence and vision. This isn't a minor disagreement, it's a fundamental challenge to how Washington does foreign policy. The rules of engagement are being questioned. The US has relied on India as a counterweight to China, calling it a natural alliance. But alliances are built on trust, not just convenience. But alliances require respect. By imposing tariffs, the US signaled its own interests come first, even at the expense of key allies. That message hasn't gone unnoticed. India's response, retaliation, not rhetoric, concrete actions, not just words, are now shaping the relationship. Indian officials are using words like unacceptable and betrayal. The tone is sharper, the intent unmistakable. This is a calculated pivot, not just posturing. India is playing the long game, weighing every move with precision. India is signaling to the world, and especially its neighbors, that it will protect its interests. Its message is clear. India is ready to lead, not just follow. The question: is anyone in Washington listening, or are old assumptions blinding leaders to a new reality? The world map is being redrawn, new alliances are forming, and old ones are being tested like never before. Allies are acting like rivals. The lines between friend and competitor are blurring in real time. This isn't just about trade figures, it's about American jobs, security, and influence. The ripple effects will be felt in boardrooms and living rooms alike. The old playbook, using economic muscle to get what we want, is being challenged. New strategies are needed for a new era. India's defiance is the first major test of this new reality. The world is watching to see who blinks first. How the US responds will define our global standing for decades. The game has changed, and the next moves are critical. Are we ready to play? The competition is fierce, and hesitation could cost us dearly. The stakes are high, and the fallout is just beginning. Every decision now will echo across continents. India is no longer content to play second fiddle. It's stepping up, determined to shape the future on its own terms. The US must decide, adapt, or risk losing a crucial partner. The path forward is uncertain, but the choice is ours to make. This is more than a trade spat, it's a turning point. The world is watching. Are we ready to meet the moment? Now let's talk about the biggest name caught in this storm: Apple. The tech giant that has become synonymous with innovation and global reach is now facing one of its toughest challenges yet. Apple bet big on India, moving a significant portion of its production away from China to diversify its supply chain and reduce risk. Billions were invested, new factories rose, and thousands of jobs were created. Apple quickly became the poster child for the US-India economic partnership, a shining example of what collaboration could achieve. Every iPhone assembled in India was more than just a product. It was a symbol of this powerful alliance and a testament to India's growing capabilities. For India, Apple's presence was a major coup, proof that it could handle high-tech manufacturing at a global scale and attract the world's biggest brands. The Make in India initiative found its champion in Apple, inspiring other companies to follow suit and boosting national pride. But now, that once strong partnership is showing signs of strain and beginning to crack under pressure. Apple is trapped between its home country's demands and the promise of its future growth market in India, forced to navigate a delicate balancing act. US tariffs have put a target on Apple's back, threatening its global operations and squeezing its profit margins. Meanwhile, India, feeling betrayed by shifting allegiances, now sees Apple as a bargaining chip in a much larger geopolitical game. The company that was meant to cement the alliance is now a pawn in a high-stakes chess match between two global powers. What was once a win-win scenario has quickly turned into a potential lose-lose for both sides, with trust eroding fast. The fallout could be catastrophic for both countries. Factories could close, jobs could vanish, and economic growth could stall. Apple's dilemma is a stark warning to every multinational. Geopolitics can upend even the best-laid plans, no matter how big you are. The US-India alliance, once so promising, is now on shaky ground, with uncertainty clouding the future. The world's most valuable company finds itself caught in the middle of a geopolitical storm, its fate hanging in the balance. And the stakes couldn't be higher, for Apple, for both nations, and for the future of global business. How is India pushing back against American influence in its booming market? By targeting Apple, the crown jewel of American industry, India is sending a clear signal. Reports say India is pausing approvals for Apple's expansion projects, putting the brakes on the tech giant's ambitious plans. It's not a ban, just a strategic squeeze, a calculated move to exert pressure without making headlines. The message is unmistakable. If you want to grow here, tell Washington to back off and reconsider its stance. Apple's billions in planned investments, assembly, R&D, retail, now hang in the balance, with every new project facing uncertainty. All require government permits, which can be quietly delayed, stalled, or buried in bureaucracy. No official sanctions, just endless red tape and procedural slowdowns that sap momentum. The impact? Uncertainty, delays, and a chilling message to every American company in India. Your future here is not guaranteed. If Apple can be squeezed, so can anyone. No company is too big to be caught in the crossfire. The cost of doing business in India is now tied to US political actions, making every move in Washington matter more than ever. American companies are forced to lobby Washington on India's behalf, advocating for better relations to protect their own interests. This is 21st century economic leverage. Subtle, powerful, and far-reaching. The ripple effect hits US suppliers, partners, and jobs, threatening livelihoods far beyond India's borders. India is showing it holds powerful cards and isn't afraid to play them in this high-stakes game. The tariffs were not a free shot. They triggered a response that strikes at the heart of American corporate power, with real consequences. The world is watching closely to see how the US handles the squeeze, and what it means for global business in the years ahead. Here's the twist. As India pushes back against the US, China is waiting in the wings. For years, India and China were rivals. Now, with the US creating distance, Beijing sees an opening. High-level talks are underway, not about disputes, but about shared interests. Top of the list, challenging the dominance of the US dollar in global trade. India and China are discussing trading in rupees and yuan, bypassing the dollar. Every deal outside the dollar chips away at American power. There's even talk of joint infrastructure projects, once unthinkable. This is a strategic realignment. An India-China partnership, even a limited one, would upend US strategy in Asia. The Indo-Pacific framework depends on US-India unity against China. If India and China start cooperating, the whole structure could collapse. The US may win a tariff battle, but risks losing the strategic war. By pushing India away, we may be creating a new bloc that challenges American leadership. What are the real-world consequences for the US? First, American companies face immediate risk: regulatory slowdowns, tariffs, and boycotts. Billions invested in India are now in jeopardy, threatening jobs back home. The policy meant to protect American interests could backfire. Second, there's a diplomatic cost. America's power comes from its alliances. Alienating India undermines our entire Asia strategy and sends a bad message to other allies. If partners can't rely on us, they'll look elsewhere. China is ready to step in. Third, the US dollar is at risk. India and China trading in their own currencies builds an alternative system. De-dollarization could threaten American economic supremacy. These tariffs aren't happening in a vacuum, they're setting off a chain reaction. We risk losing market access, trust, and the foundation of our global power. The blowback is real and happening now. We're being challenged not by an adversary but by a friend we spent decades cultivating. This is a self-inflicted wound with long-term consequences. This isn't just about corporations and currencies, there's a human cost. If India squeezes US companies, Washington may retaliate by slashing H-1B visas for Indian tech workers. That would devastate thousands of families and hurt the American tech sector. Silicon Valley relies on Indian talent. Cutting off that pipeline would create a skills gap and slow innovation. The move would hurt America as much as India. Using people as pawns in a trade war is a moral and strategic mistake. The Indian diaspora is a bridge between our nations. Alienating them would create lasting resentment. Top Indian talent would go to Canada, Europe, or even China. America's greatest advantage, attracting the best and brightest, would be handed to competitors. the human and strategic costs would be enormous. Let's step back. The US strategy in Asia is to build alliances to counter China. India is the linchpin of that strategy. So why pick a trade fight with your most important partner? It undermines unity and forces India to question our reliability. This isn't just a tactical error, it's a strategic blunder. We've taken allies for granted before, prioritizing short-term wins over long-term relationships. India wants to be a leading power, not a junior partner. By treating India as a tool against China, we risk losing a decade of careful diplomacy. We're pushing a natural ally into the arms of our primary competitor. To understand this moment, you need to understand the new India. This is a nation with confidence, ambition, and national pride. India expects to be treated as a rising power. The era of deference is over. India's pushback is seen as a defense of sovereignty, not aggression. National pride drives a strong, assertive foreign policy. The government has the will and mandate to hold its ground. Washington must realize it's dealing with a nation ready to pursue its own interests. This dispute is a test of America's ability to adapt to a multipolar world. The choice we make now will shape the global balance of power for the 21st century.